Hi, and welcome to our end of September update from the Wealthy Doctor Institute. Physicians leading physicians through finance. We work with physicians and other busy professionals who are not happy with their current investment strategy. We help them get this part of their lives handled so they feel empowered and in control. I'm David Ye, and in my book, The Busy Doctor's Investment Guide, I show you just a few ways where just a few adjustments each year can help build and protect wealth. Although the strategies in this book are easy to calculate each month, for those of you who are new to the concepts of the book, or for those of you who are new to investing in general, the video will try to clarify what I do every month. Feel free to follow along every month until you get the hang of it. So this month's video will review our systems, starting with the 20-month moving average system. After that, we'll review the sector server version of the MRI system, remind us about the rules for a 25% stop loss system, and then monitor the free sector server strategy that comes with any sector server subscription. And just to clarify, I am not the author of sector server, I merely use it and I'm a very raving fan. So, to review our systems, the first system is a 20-month simple moving average system, abbreviated 20-month SMA. So, the rules are simple. If the price of the S&P 500 index is above the 20-month moving average, it's relatively safe to stay invested in the fund, otherwise get out. The 20-month moving average is our safety belt. It only works if we watch it every month. So here's how it works. If the blue line is the mutual fund that invests in the S&P 500 index, reinvesting all dividends and capital gains, then the red line, every dot on the red line represents the average price of the last 20 months. And you can see that if the blue line is above the red line, it's relatively safe to be in the stock market. Stock markets can wiggle up and down, but we never know if the next wiggle down is really just a small wiggle or is the beginning of a major downtrend. If it goes below the red line, we get out. And when it gets back up again, we get back in. So right now, it's hard to see on a monthly chart, but the first 5 months of the year were pretty choppy, up and down every month. But the last 4 months have been very smooth. And at the end of September, the mutual fund, the Vanguard S&P 500 Index Mutual Fund, the one that has the most historical data that I can use to backtest, ended at 269.09. The moving average ended at 239.21. So just a quickie calculation, you don't have to do this, I'm just showing this for illustrative purposes. We have a 12% cushion. In other words, if the S&P 500 index goes up or stays level or even drops as much as 12% by the end of next month, we're still relatively safely in the safe zone. We don't worry about any stock market crashes until it actually crosses below this red line next month. And we only watch this once per month, not more often, not less often. So here's a sector surfer's Stormguard Armor indicator, which is pretty much the same as what I try to do with the 20-month moving average. Instead of using a 1 variable filter, Stormguard uses a 3 variable filter. And for Stormguard Armor, this whole month we've still been in the S&P 500 index. So here's the Stormguard Armor indicator. It's still in the white zone, not the pink zone. That's why we stay in stocks for now. And we've been in stocks since late 2016. So observations for this month: the S&P 500 index continues the game. The indicator continues to signal relative safety in the US stock market. And Sector Surfer's market filter also remains in the safety zone. So remember, these systems are not designed to catch peaks. Markets must begin to fall and fall enough for our systems to fulfill criteria for a danger zone before getting out. So if you're looking for a system that doesn't lose money ever, this is not for you. However, for at least the larger bear markets, these systems increase our chances of getting out early enough to make a difference in our investment. So next system, normally I would talk about the monthly rotation investment system, what I abbreviate to be MRI. But again, I'm no longer going to be covering the pencil and paper version. And that's because the sector server version of the MRI has been doing so well compared to my book version Plus, I'm finding that most people don't have the patience to do the pencil and paper version that I outlined in my book. So I'll just cover the sector surfer version of the MRI, which means using the same 3 sector mutual funds, the S&P 500 Index Fund, the Emerging Markets Index Fund, and the inverse S&P 500 Index Fund, plug into sector surfer but do not use a StrongGuard filter. And if we were to do that, we see that for this month we've been staying in the S&P 500 Index Mutual Fund, which is great because had we stayed in the emerging markets, it would have kept on going down until September 12th. After then, the emerging markets are slowly creeping back up again. But again, we still don't have enough data to tell whether or not this slow creep is really just a wiggle or if it's the beginning of a new dominant trend. So stay tuned next month. Meanwhile, this system has us staying in the S&P 500 Index Mutual Fund. And just another observation, you can see how the inverse fund is also almost completely flat like the index fund, so we're just barely squeaking above the inverse fund. So the observations of the month for the MRI system, the S&P 500 index momentum continues to be greater than the emerging markets. So even though the emerging markets appear to be bouncing back since just a couple of weeks ago, it has not yet met criteria for switching back to the emerging markets yet. So stay tuned for next month and see what happens. Meanwhile, the next system we'll cover is the 25% trailing stop loss system. So the trailing stop loss system is predicated on the concept that you do not want to take more than 1% risk on any one stock, assuming that for some strange reason you absolutely have to buy this one particular stock. I mean, I get approached still all the time with, what do you think about this stock? Or what do you think about that stock? Well, I don't look at the fundamentals as much as I do the technicals, just because, remember, what you hear in the news, what you hear in the newsletters, what you hear from the CEOs, what you hear from the analysts, what you read from the financial statements, they can all be misleading. And they're indirect indicators. The one source of raw data that cannot be faked is every trade ever made in that one stock is recorded in the stock market chart. So to risk only 1% of our total portfolio on any one stock, what we do is buy using up to 4% of your trading account that one stock, and then immediately put a 25% trailing stop loss order. Not a stop loss, a trailing stop loss. That means when the stock goes up, the stop loss automatically goes up, locking in gains. Whereas when the stock starts to go down, the stop loss does not change until finally the stock goes below the stop loss and you sell. So if the stock goes up 33%, the stop loss order has essentially went up to break even, and you can go ahead and buy another block of stock using another 4% of your account, because your risk for that one stock, for that one position, has decreased enough that you can go ahead and buy another aliquot, and then update your trailing stop loss order with the new number of shares. And just keep on doing this until you're stopped out. So the next system is your own sector surfer system. Sector surfer is an improvement on classical pie chart investing if structured correctly. Let me illustrate. Remember, sector surfer has two main tools. It basically takes those two concepts I talked about, telling whether or not it's safe or dangerous to be in the stock market, and optimizing momentum in either phase of the markets, and combines it into one system. So if you set up the strategy properly, whenever there is a trade signal, you will get a signal through your email or your text, depending on how you set it up, or both, one as a backup. But if you're like me and you're anal, I log on periodically, typically once a week at least, to make sure that I don't have any trade signals that I've missed. So here's a free sector surfer strategy that comes with your subscription. It takes just 6 Fidelity stock and bond funds and rotates them using a earlier version of StrongGuard called StrongGuard Acute Quick Response. and it goes to cash when it's dangerous to be in stocks. So just by trading maybe 5 times per year, you can get this yellow line, meaning that it has an annualized return of almost 15% compared to 10% for the S&P 500 index. And if you're okay with this, then it's free. Obviously, based on what we've covered so far, we can tweak this a lot more and probably get better returns. However, once you tweak this, now it becomes your modified strategy, and then you have to pay a small monthly fee to follow your modified strategy. Now remember, Sector Server has several free strategies already built in that you can choose from. They're all kind of like this. You can always improve on them, but again, if it's good enough, go ahead and use it. And speaking of trading 5 times a year, guess what? This month there's a trade alert. We're supposed to, when you go to the website, say sell the Fidelity Small Cap Mutual Fund and buy the Fidelity Large Cap Mutual Fund. So that's the date that the signal was generated. Once you see this signal, you log on and you go, make that trade. Then you click on Acknowledge Trade. You see this big red button. You click on that and it turns into a green Done button with the date that you did it. And then Sector Server will stop bothering you until the next signal. So in summary, here's what we covered so far. We've covered our systems. Our 20-month moving average system, including a more sophisticated system through Sector Server. We covered the Sector Server version of the MRI system. We covered a method for dealing with stock tips, and we covered the free Sector Server strategy that comes with your subscription to Sector Server. Remember, this month there's a trade alert. So keep those questions coming. I know I talk to several of you personally each month, and I realize that for some of you these video updates are not enough, especially if you're still unhappy with your current investment strategy or lack of strategy. I'm going to offer a complimentary investment wellness checkup session. This is a session just you and me. Ask all the questions you want. There are no such thing as stupid questions. And in our session together, we'll work together towards the basic building blocks. First of all, create a sense of clarity about the financial future you really want. I mean, why are you investing? Makes a huge difference how we go about deciding what to do next. And then determine what has stopped you from having investing results or even stopped you from investing in the past. Identify what actions you can take that may help move you towards the financial goals that you desire, and then finally complete the consultation with the excitement of knowing exactly what to do next to create the financial future you really want. So I've made this as easy as possible to schedule. Just type in this URL and pick a time slot that works for you. If you're local, we can meet in person, or we can screen share on a computer, or just talk on the phone. Your financial destiny awaits. So, until next month, invest safely.